Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Chicago wheat and corn. I'll start with Chicago wheat. Since the late March low, we have seen the market gradually gap its way higher, though to be honest, it has not been as inspiring as the gaps would suggest, with far calmer markets than compared to the moves of late February and early March. However, last week the market made an outside week, if only just, with bearish tendencies. The outside week is the lesser version of the weekly key reversal down. So though it was milder and only just an outside week, it was certainly something not to be ignored. You see, it saw prices finish last week testing the lower time, currently 1098, on the downside of the nascent early February to late March bullish shift pitchfork. This past Monday, as a result, was interesting, as it had combined patterns that day that I suppose in some ways almost diametrically are opposed to each other. There was an indecisive spinning top. There was also a daily key reversal down. The daily key reversal down did not triumph as prices moved higher, but were capped by the congestion which we had seen last week and the week before between 1104 and 1125. This caused two indecisive doji crosses on Wednesday and Thursday this week, but the one yesterday was the first proper close below the lower time. You see, the space between the rising lower time and the congestion overhead had diminished to nothing, and so something was bound to give way. It seems that this time it was the lower time, as today, the last day of any sort of gap in between the lower time and the congestion, we've seen a strong move lower. It now all depends if prices can close below this lower time tonight. Additionally, a little bit further down, we have the 50% Fibonacci line for the 2021 action, along with some other congestion in the 1051 area. And this will be the next support if it's going to be tested. Beyond that, we have some congestion at 998 to 1003, but with better support in a congestion between 959 to 978. Meanwhile, and it is a just-in-case situation, looking above, beyond the high of last week, the next resistance is the very recent 50% Fibonacci line at 1166. Chicago corn. First off, please kindly still ignore the color change in my labeling. This is something that my charting system occasionally does without my permission. There's no special quality attributed to the different colors. Just they do. Okay, so the latest move higher in this market can be attributed to one key action, which led to many others. The key action was the almost weekly key reversal up that happened at the end of March, but which ended up being the lesser outside week pattern instead. That week was also a spike bottom, which along with the earlier pipe bottom in mid-March formed a double bottom, which caused prices to rise. Anyway, the rise continued until last week when that Friday and this past Monday together made a new pipe bottom. This caused a fresh move higher this week into levels not seen since August 2012. At the same time, prices were tracking under the middle time, currently 821 of the April 2020 to September 2021 bullish Andrews pitchfork. Thus, they used it as a rolling higher resistance. Today, prices have pushed higher over this middle time for the first time into what looks like a fairly clear area overhead, up to the congestion at 839 and the August 2012 high at 849. This eventuality was something I cautioned about last week. Thank you for listening. This weekly broadcast gives you essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.